It's a fake high. See, yep, fake high ES. That's not actionable yet. That's a real high. Turned into a real high. Actually, no, that's still a fake high. Sorry. If you're looking for a short, probably 23.75 or so right here. Risk is at the high of the day. One second, gotta manage my trade. I'm gonna cut it off soon. Actually, I don't see too much happening. Still the same thing. I think that this needs to go. I think we will do a back and fill in ES, but um, the areas I want to get long is 08, you know, depending on price action from 0850 to, you know, 01. Um, and where I want to get short is the upper limit, which I told you guys about already. Let me go ahead and check the names really quick. Apple gap down. Amazon is not doing shit, but holding. Tesla's finding support here, or should find support there. Google's not doing shit. Oh, wait. Oh, that is floating. Microsoft's just floating. That is inside day so far. Bungie is just floating upper range. NQ is below its +1 while ES is above it. So it looks like they're mainly buying ES right now and down. Let's see. We have a fake high in the Dow. Russell looks weak as fuck. Although that is also a fake high. Again, I'm more interested in the long side of things. That was a real low in NQ, and then coming into it, there was an imbalance to the downside. There's an imbalance right here, which means they should start buying more. More buys. FNC. Imbalance at high side, yes. Write this number down, 37 and a half. 37 and a half in ES could potentially be resistance. So I know in Z plays we have the upper range. Just know that 37 and a half could pose as a reversal point as well. Yeah. Um, Look at how Asia session, what we did during Asia session, not a lot. London came up. For all of you guys who do trade, overnight, these are the perfect times to do, the screw jobs that I've been preaching about for a while, right? Uh, these are the times they don't necessarily want to get outside that range. This market isn't really going to move anywhere until, probably Thursday. Is it Thursday? I think it was like Wednesday, Thursday, or Thursday, Friday. So, just keep on paying attention to that. The screw jobs, right? So I still think that this is a buy first market until we reach the upper bounds. So I would put a flag or an alert at 37.5, and also at those upper ranges or targets in the ES. Um, again, those of you guys in Z place, right? Don't go chasing waterfalls. Stick to your same shit, right? Yeah. Um, I believe we did we cap? No, we didn't cap. We just went. Oh shit, Andrew. I need five. Million shares. Jesus Christ. What the hell's going on over there? Maybe that's why ES is getting fucked. Shit. 965. I'm out of my Swiss completely now. Let me check real quick. It's a decent high in ES as of now, but that doesn't mean that we can't have more upside. And you're getting slammed, so which is probably what Chow just posted. Harvey, in case you didn't hear, you can use your daily levels to really trade this market now. So anytime it gets to an extreme, you can probably look for a price action without it being a Z play for it to revert back. This month is probably the perfect month for it. That's a good low so far. and NQ. Um, you can probably take this back up to you can probably take this back up to 1925, 19 and a quarter. Yes, still not in the zone yet that I want. Real low and crude, big low in ES, but I still think that it's not actionable. I think that we're going to probably push a little bit lower. And if you want to get long NQ, you better wait for ES to set up first. Imbalance on the low side for the Russell, but again, you're waiting for everything else to set up before you're even touching it. Dow has a true high. Lucky exit by me on the Swiss. Dollar has room to go down to 101,896, which means other currencies probably have room to go up. Slow move so far. Real low in ES. Real low in NQ. Hmm. Sellers were absorbing at 20 and a half, but now buyers are absorbing. So this is probably going to be a little fight in this area. There goes that pop. Sellers absorbed again. So they are definitely fighting for this. Real lows in crude. Back and fill to 21, maybe 21 and a quarter. Buyers are being absorbed again. Buyers are being absorbed a lot. Question is, are sellers going to step in? Buyers are continuing. If there's any type of seller, they're probably going to screw all these buyers. So, I mean, I don't see any sellers just yet, but there goes that 21.25, by the way. And then 2-tick MAE should be able to risk mitigate already by now. So the buys are sort of taming off. And for me, it's like what I want is one last push by the buyers. If you're looking for a short and like a really good push, and then that would signify like that's their last bullet. And then once that happens, usually buyers will step in, or sorry, sellers will step in, and then it'll be a nice, easy, clear road to the downside. If you're looking for, you know, if you're erring on the shorter side. So the question is still consistent buying and absorption? Are they just, saving their bullets for later? No. Very efficient selling. Looks like sellers are trying to step in. $19.50 might be another entry. Sellers did get absorbed a little bit, so I guess it's just going to rotate. Sellers being efficient, too efficient. Anyone able to get into that short?
Yep, but a bit late, 1825. I waited for the break of the 30-second small body candle from the week.
Yes.
Uh,
One second. I just got
I'm risk mitigated, so I can just let it go be now if it comes back.
Very nice. Hmm,
Taking profits here.
very nice, sir.
Yeah, probably too early.
Um,
Oh wow, no, that's going down.
I think that you should be taking profit unless it's a target of yours. You want to do it at a price action, not because you never know what the market's going to give you, right?
Yeah, I wanted 10.50.
Yeah, I mean, I think that ES can easily make it to 925. Easily 925. Um, because Swiss already ran, I'm posting because it's happening right now. Just wait for the price action for it. I'm posting another Z play. I mean, I'm not forcing or anything. I'm just saying. It's going to be in Canadian dollar. The CAD. If you're not used to trading currencies or anything, you're not used to trading like nat gas, even though it didn't work. You want to just practice it on sim, right? You don't want to force it or anything like that. So just practice it on sim. That's a fake low in ES. Real low in NQ. Fake low in the Russell as well. I don't think that's the end of the low in ES, but that's just my opinion. That's a lot of fucking buying for not a lot of gain. Buys are still present though, and they're getting absorbed. So, yeah. Thanks, Ryan. I think I'm thinking that maybe yes, maybe not get to the overnight low, but damn close to it. At the very least, I do feel like they do need to get to 09 and a quarter. I think potentially CAD is setting up shortly. Not entirely just yet. Um, I think you can probably get at 74, 755 if you want to take that and then risk mitigate quickly. A shit ton of buying just came in for CAD. Sellers are just absorbing the shit out of NQ. Use my language, but yep. That's a fake low in crude, not actionable yet. A lot of buying just came in for the Russell, but not a lot of anything happening. Again, still think there's still downside for ES, but you gotta watch it. As just running, there was a chance to get in on it, um, but in back and fill as much as I would want it to. It did go right into the area. Potentially, if you bought it quick, maybe 74, 74, 76, but there's still a chance for this to come back. Be right back. Need some water.
Pretty happy with my take profit right now since I got in so late.
Oh, I was wrong. We're not going lower.
Yeah, I already said I'm pretty happy with where I took profit.
Oops. It's imbalanced to the high side in ES. I wouldn't want to be looking for buys here. I've been known to be wrong, but this is the waterfall you don't want to chase. Why is everyone so quiet today? What's happening? Hmm. These are the times where you don't want to over trade or trade. Yeah, I wouldn't trade too much. That's a good sell off right now. Even though it went up, I still think that there's plenty of there's still downside in my opinion. Like I don't want to be buying up here. That's a good low in gold. Anyone able to get into that Canadian dollar trade? Yeah, it was a really, really small time frame. The pullback was shallow. Peter, remember what I was saying about currencies, right? Their pullbacks are much more shallow, and if let's just say everything else lines up, like all your ducks line up, with the exception of say a small time frame entry, what you could do, you know, and when I say small time, I'm talking like 5 seconds or less, right? Um, or 5 seconds. But as it's doing this, and this is the current price, you could actually just buy it if it breaks this. Like, again, this is just on a small time frame, so you keep your stops still small, right? You could do something like that, if that makes sense. So, for instance, let's just see like, uh, you know, Canadian dollar. Um, it's hard to see because it's on such a small time frame, but it's essentially doing something like this, you know, that, and then that's the bottom, right? So what you can do is just immediately, kind of trail it and just put your buys there, stops right below that. Um, and this is, we can work it out real quick. Um, well, for exercise purposes, I'm gonna just do the calculation real quick for you. Just so like, oh, what's the cost of it? Um, so off two contracts, this type of setup, you're only risking $70, right? So, but of course, everything else has to line up, with the exception of the small time frame setups. Yeah, and it's on minis too. You know, currencies are fairly cheap. Don't mess with micros. They snap weird. They're so cheap that no one will really trade the micros. And they just act, yeah, they just act a fool. So I'm gonna do an early trade check. Um, for newer people, trade check is just the number of trades you've done. It's good, guys. OZ and 8-4. Guys, keep your trade counts low during the summer months. I mean, for sure it's leading, but I don't, yeah, I don't know why it's leading though. Um, yeah, I mean, I can see that it has a lot more room against the Russell NQ and ES, uh, but more so against the ES. But I don't know why it's being. I mean, it's getting. Yeah, I don't know why it's being bought up so hard right now. You know, no clue. I have no clue why it's being bought so hard. And like even during the sell off of NQ and ES, it just held strong. I think so. Yeah, I think so. I think I've been leading long. Again, the question was in the very beginning, it was more of finding areas to get long, basically. That was my trade plan coming in. And because I do think that, we will be going up. Um, so I think NQ was a good buy. I don't know about now. I think that if you look on like a daily, you want to play on the lower end of the range and nothing more, meaning for the buys. So right now we're semi almost to the middle. So I think buying here could, I mean, as a scout perhaps, but as far as holding it a little bit longer, I personally don't like the area. If you know what I'm talking about. Not saying it doesn't go up, just saying that the trade location is not where I like it to be. Hmm. Yeah, I sell off and um yeah, yeah, major, yeah. Well, the thing about the summer months is that again, they don't want to go too far into an area where they feel like there's going to be a reaction because there's not enough participants. But the participants can still be triggered, if you know what I mean. Like if it gets into an area where, say, some type of, system is automatically going to fire there, and this is just what I've been told. I don't know if it's 100% true. Um, they don't want to get into dangerous territories like that because those algos or whatever systems can just automatically fire and screw whoever's pushing it down. So they don't want to get into, like, if you're just a market maker or you're just, a short-term algo, you're just facilitating it right now and within the range for the most part. You're not trying to, push it to all-time highs or anything like that. You're not trying to do anything, crazy. Just like I believe it was 2021 Thanksgiving. For US, it was Thanksgiving, and London opened, right? And they sold off the ES like crazy, triggering a lot of these so-called algos or systems, even from the US, to start selling like crazy. And I remember that because I got a shit ton of texts from my group, like during, because we all have alerts. And during, Thanksgiving dinner, it just went crazy and went off. And we're like, what the fuck? And we're just, so just FYI. Oh, Peter, yeah, they're the bigger institutions and stuff like that, right? Usually hedge funds. But, um, yeah, yeah. So again, this is just what I've been told. I don't know. I didn't fact check it. I trust them, not only because they work for funds, but they said there are certain areas. It differs. It's kind of like if all of a sudden, um, a stock or an index hits like, you know, I don't know, 7 or 10 ATR. That's an anomaly, right? So things are just start getting triggered in. Like, this is just way too whatever. Or they get triggered out. So it doesn't necessarily mean they enter the market. They can be exiting the market as well. Because they could be, because there's contingencies on flash crashes, right? So in case something triggers that, like, let's just say we did have a flash crash or something, they'll just automatically start dumping things because no one knows what's happening. So they'll just start dumping it, is what I was told. So it's a two-part thing. One, they might enter, or the other, they might exit. If it gets to a certain area or a certain parameter that they're like completely uncomfortable with. So given that, and it was a great observation by you in the gap. If we get into that gap, it could, automatically trigger something. I don't know. I'm not saying it will. I'm just saying that you have to kind of think it from that standpoint. You know what I'm saying? Like, is that an area? I don't know. I don't know that it is. I'm just saying that it could be. So low volatility areas, they don't, it's kind of like Asia. They're not going to take something unless they have huge conviction. I mean, like real buyers stepping in or sellers to really buy or sell something with conviction. Otherwise, they're not going to do it because they're not going to just, fuck around and see what happens, right? That type of deal. Yeah. And also in terms of your ES, like the question, making higher highs, was that a top tick? We don't know. We're still so to buy NQ, I don't think that it's wrong. I'm just saying you have to still do the matchup, find the location, and then find the matchup for it to continue to go up. So at the time that you were talking about it, ES was definitely making new highs. But as soon as it does a top tick, I will be like, nope, don't want it. You know what I'm saying? But that doesn't mean that it doesn't work out. I mean, it's the market. It can do whatever the hell they want. But as they were doing the top tick, and precisely at 9:30 Central Time, it did that reversal. I'm like, do you really want to take it now? And it was, if I believe so, no, it was a real. It was a real high, but still, I'm just saying, like, you have to be a little bit careful. And a lot of buyers stepped in to facilitate this higher. But what does that mean? It doesn't mean shit. in my book, it doesn't mean too much because we don't know who these buyers are, and are they buying it up to sell it off at a better price to trick people, to trap people? No clue. We can only lean on location and the correlations with the capital flow. So yeah, but good observation, and I hope you put on your chart. I'm gonna put on my chart. Yeah.
Zero. Did Penn? Sorry. No, go ahead.
No, go ahead.
Did Penn answer you in terms of the slopes she's trading and looking at? And
I have a couple messages from her. I haven't read it yet. Let me read it later, and then I'll post it, and I'll at you as well.
Thank you.
When I do post it. Thanks for a reminder. I'm really bad at answering private messages when, yeah, sometimes I'm really bad at it. I know that she did tell me that because I saw on my phone it gives a little, short description of what she's texting me, but she did tell me that she sold some Apple right at the open today, which good for her.
Well,
I didn't see the reason why. I'm pretty sure it has to do something with like averages or whatnot. By the way, is my mic low? Okay. Yeah. I don't know if that was her, but it is. It's pretty crazy. Hmm. You turned on the seed volume. You mean for me? Is it really that low? Turn up. I guess it is low.
Whose volume's low?
I think my volume is low.
I have no issue.
Oh, numbers. Someone had a question about gamma.
Yeah, what about Gamma?
Timmy?
yes, we are gamma negative now, right? GEX exposure right now. So dealers would actually follow price. If I'm correct. I don't know. I don't have spot gamma, unfortunately.
From a hypothetical, hypothetical, and it's the best way I want to phrase this. From a hypothetical narrative, if you were to adequately adhere to quote unquote literature pertaining to it, then yeah, dealers will when it's negative, they will accelerate movements in price. However, what matters is the real time activity. Simply saying, oh, Gex is negative, Gex is positive, that's going to be a circumstance of, well, how are dealers positioned going into there? That's primarily what matters. And someone who just says, oh, I'm making a decision based on if gamma is negative or positive, that's entirely negating how dealers are actually positioning themselves in the change in open interest to the strike price. If you have a high open interest, how is everything being repositioned as price enters it? What's implied volatility doing? / Vega. That's primarily more important is looking at Vana as price enters a strike. But only using gamma is not going to be, it's going to be far from adequate.
No. So Vana and Charm are second degree Greeks, as
I'm
far as
aware.
Yeah.
But those are indicative of where price will be going because implied volatility is going to have a direct representation and effect on an options pricing. If you are going up to a price, let's say prices, you're seeing a sell-off and we're down 50 points, but you have Charm is the change. Sorry. Vana is the single day change in implied volatility as price goes in. So delta on that. And then Charm being the day over day change in Vega. If you don't have any decay or acceleration of Vega / or implied volatility, one of the same, going into a strike price, but ES is down 50 points, well, that's a pretty good indication that along with open interest increasing, that might be a level where price could bounce. However, using Gex or Gamma without any context of where you want to execute is useless.
All right, for sure. Where would you suggest retail get their numbers for those? I guess you have some pretty proprietary things. What about? I know there's Spot Gamma, and the guy who does this has done it for 14 years. Where you get those pretty, I don't know.
I really don't think most of retail, it's information overload.
Okay.
If I were to say anything, let me check. I have to go in a moment. I would say, which is the Discord. They delete it. Hold on. Xbot now has a direct integration into Sierra Chart. I think that's the more prudent option.
Gexbot now.
Yeah, Gexbot. They have Gex levels which will overlay onto ES charts. I'll look into that. I think outside of it, it's decision paralysis.
Thank you.
You're welcome. Yeah, I might be back a little bit, but I need to hop on a call.
All right, man.
Yep, take care, dear.
Later. Nice, Zine. At least you stuck with your rules. It's good stuff. I'm also gonna cut. I mean, there's just not much going on. It's just to crawl. Um, I would suggest anyone who hasn't traded summers or isn't familiar with summer trading. Again, it's just either take your profits quick or just one direction move. You're not looking for it to go too far and you get out. At least that's just what I think. But another real high in yes. Anyways, if you have questions, let me know. If not, I'm gonna cut. I'm still holding on to my oats. Took a small loss in nat gas, and then had a decent trade in Swiss and short in ES during London. All right, guys. If nothing, then I'm gonna shut off. It's best not to stare at this shit too long.
Bye bye.
All right, later, guys. I'll see you guys tomorrow or later today. Later.
My name is Anders Jensen. Let's learn the Power Automate desktop and click Next. And the canvas here. And our variables to the right. I have some Excel files, I have some PowerPoint files, and some text files. And as you can see, this is a mess. We want to clean up here. So let's see how we can do that with Power Automate. Go back to our Flow Designer, and the first thing that we will do is to get the files on the desktop to a list so we can work with them and inspect them. So choose the Get Files in folder and drag them out here. The folder, well, we can just click the folder icon here, and then we can choose the desktop because the files, they are on my desktop. So click OK. Then we'll just click Save. And now you can see that we store them into a Files variable. The flow variable is over here. That means that we have created that variable here in our flow, and we can open up the action again. And then we can see that the variable is produced, and go down here, and we can see that it's called files. We can even rename it if we want. Just make sure you keep the percentages as they are. I'll just be retaining this files. So then we will need to display this list. This will only create a list with the files on my desktop. So now we want to display them. So search for display in our actions, display message, and drag it in. What this does is it will just create a pop-up with the list that we specify. So message box title, that is my files on desktop. Message to display. Well, we want to use the list that we just created up here. So
one of the best things I found early on in my career was Stan Weinstein's book, Secret for Profiting in Bull and Bear Markets. And basically, it drove into my mind that you don't buy stocks in downtrends. That has saved me kept me in the business. I've seen so many people get blown out or, go have to rebuild and come back buying stocks in downtrends. So that was really the first and foremost thing is I only buy stocks that are in a primary uptrend. I wait for a pullback, and then, I've refined it in terms of the time frames I look at, the time I'm willing to hold a stock, and then tools like the anchored VWAP, which has really become much more critical to me since about 2015, has really become hold a stock in terms of the time frames I look at, the time I'm willing to hold a stock, and then tools like the anchored VWAP, which has really become much more critical to me since about 2015 when I convinced TC2000 to add that to their trading platform, to their charting, that is.
That's interesting. It's a really good book that I also remember reading that I really like from Stan Weinstein. So pretty cool you mentioned this. I wonder how many people read that book today though, because it's pretty dated at this point. And it's definitely good lessons, but people these days seem to kind of forget the old books.
Yeah, I mean, there's still a lot of classic principles in there, and it's still a great selling book. My first book, Technical Analysis Using Multiple Timeframes, I kind of expanded on what I learned from Stan and from other places, my experience, and use that for trend alignment, meaning that, we've got a stage 2 uptrend on the daily time frame. On the shorter term time frame, if we're stage 3 decline, I'm going to avoid that. I'm stage 4 decline, I'm going to avoid it. Stage 1 on the shorter term time frame, I'm going to start to anticipate where the buyers might take control. And then right at that first part where we're in a short term stage 2 uptrend, that's where I want to participate, because now we're in alignment. The two trends are in alignment. So it's about being patient, obviously, and waiting for the evidence rather than just saying, hey, I'm going to buy a pullback to this moving average or to this VWAP or to Fibonacci or something like that. It's a lot of planning and waiting for the right opportunity, then pulling the trigger and making sure, to manage risk. That's the key.
Does that idea of trading multiple time frame also work well for catching reversals, or is it mostly for trend-based trades?
Yeah, for me, it's trend-based trades. I don't really think it's great for reversals because, you've got, a stage 2 uptrend that pulls back hard, let's say, and you're looking to buy that bounce. I'm not trying to buy the bounce. I'm waiting to see the smooth transition from sellers to buyers, and then the buyers regain that control. To me, it's just, that suits my personality. And that's a real important point for, newer traders is, understanding where you fit in terms of your personality, your risk profile. So me, I've always been pretty risk averse. And, it kind of runs contrary to what most people believe a short-term trader is. They think, oh, wow, you must be so stressed out. It's so risky. I'm like, it's not risky. No, not compared to what you're doing, just buying and holding and watching these stocks decline 50% and feeling like a hero when they're back up 10%. That's risky. I'm a risk manager. I manage risk first and foremost. So there's very little stress in that.
How did you figure out some of your personality in trading? Was it through trial and error, like trying different things and going back to other stuff? Or did you sort of feel from the start kind of what kind of personality you had?
Well, I mean, I kind of knew that I was a trend trader. Part of when I was working at Lehman Brothers as a broker, I was working for a senior broker there, and he would buy stocks of companies that reported better than expected earnings and had a good chart pattern to go along with them. And I remembered him just doing really well with that for his clients, much better than the other brokers in the office. So that kind of set some of these principles in place. Then I found Weinstein's book. But I've tried mean reversion trades, and I've learned the hard way that I lose money on those net on balance. I tend to get too emotional. I think, well, it's going to hold this 20-day moving average. I'll buy some. Oh, it didn't hold that. It's at the 38.2% retracement. I'll add a little. It's got to hold there. Then it goes down to the 50-day moving average. Well, this is clearly the bottom. I'm going all in, and then it keeps going lower. I end up puking it out and taking a huge loss. So that clearly does not suit my personality, and I don't think it suits most people's personality. It's a way of looking at, hey, maybe I can catch a quick move if I get that reversal right. But 7 out of 10 times I wasn't getting them right, and experiencing losses. So that's how you learn your styles, through trial and error, I think. And the key is, to do it with smaller share size until you get to the point where you recognize who you are in the market. One of my favorite phrases is, if you don't know who you are in the market, if you don't know who you are, the market's an expensive place to learn. So, keep it small, keep it light, figure that stuff out. The market will be here. There's no hurry to get involved. So just keep it sane and learn and practice on small sizes to start.
That's a good one for sure. Now, tell me a bit more about VWAP, which is a tool you're using a lot. I know people who would think of VWAP as a moving average and that's it, but how much does it go beyond a simple moving average?
Well, okay, so a simple moving average is just a time and price based. It's, a 10-day moving average says, here's the closing price of the last 10 days, divided by 10, that's the average of the last 10 days. On day 11, you drop day 1 off, and day 11 becomes the new day 10. So it moves with new data. Similar, the volume-weighted average price, it moves. It's a volume-weighted average price, meaning that it has a fixed starting point. So the traditional VWAP starts from the beginning of the day, 9:30 a.m. New York time. The market opens. That first trade counts just as much as the trade that occurs at 10:35 a.m. or any other time during the day. So what it's taking is the average price for a fixed unit of time and saying, here's where the true average is based on price, volume, and time. So it adds in the volume. It tells us the true, price memory. Price has memory. So the VWAP is simply for one day. The anchored VWAP is we choose a place other than the beginning of a day. It could be, the noon high that the stock made if you're an intraday trader, or it could be the high that was, or the low from the COVID in 2020, or the high that was made in 2022, anchored off that peak. It tells us, so what it's telling us is when that average builds, it's a cumulative average, but it does move. So it's a cumulative moving average because it builds from that start point and it moves with each new piece of data. So it's a cumulative moving average rather than a simple moving average. And it tells us if we're above that volume weighted average price, the buyers are in control. The short sellers are losing money. That's just a fact. It's a mathematical principle. There's no argument about it. So we can start to see, for instance, from earnings reports. If you think about NVIDIA and the most recent earning report there, if you anchor to the beginning of that gap, what we saw was, a week and a half ago, 2 weeks ago, the stock came down perfectly and touched on that volume weighted average price from the gap. Buyers showed up there and then the stock continued to move. So it's a tool that institutions use for execution of their orders. And it's morphed into a technique to, analyze the data. And it's 100% objective. It's not, some weird math formula. It's telling you, here's the actual price action, that's based on the participant, every single participant.
So it's basically used as a place for looking for a bounce in the trend, right?
A lot of times it can be used for a bounce. It can be used as a place to say, for trend reversal. If you're saying it's pulled back down to this volume weighted average price from the low 2 years ago, that to me is a place where a bounce might occur. So I look at it, not as support, but a level of interest, potential support. I look at it pulls back, to that VWAP or that anchored VWAP. I'm not going to necessarily buy straight away, just like I wouldn't buy right at a 20-day moving average or a Fibonacci. I'd say that's a level of interest. Now I want to see that if in fact the buyers have, programs to buy in this area because this is so-called fair value, then it's going to show on the shorter term time frame. So it all goes back to that multiple time frame analysis and saying, now we have a level of interest. Let me switch to a shorter term time frame to see if the buyers are in fact gaining control. If the stock just continues to blow through that level, well then, I just watched it. I didn't buy it and lose money, right? I'm not going to blindly buy into any level. I just can't do it. I have to wait to see that it does in fact become support. So if it starts to show, that it's finding support there, and then as it starts to bounce, then I want to buy with those momentum away from that level. And then, of course, set my stop underneath that most recent low in case it's wrong and it pulls back down and reverses lower.
How do you pick the period of your VWAP? Is it based on like how the market moves in different conditions, or is it based on the period you want to trade it in, or how does that kind of work out?
So great question. It's all time frame dependent, and if you're simply a day trader and you're in and out of one stock, 15 times a day, well, you have your daily VWAP that begins at the beginning of the day. Let's say the stock gaps up, pulls back down for the first 8 minutes, then it gets back above the daily VWAP, then I want to buy there. It shows the buyers have regained control after some initial profit taking. Let's say it runs up for an hour and a half, up to 11 a.m., and then it starts to pull back. So at 11:10, I see, that was an important high at 11 a.m. I'm going to anchor from that peak. And then I want to see that, as the stock pulls back, maybe it finds buyers at the daily VWAP, and then it compresses underneath the volume weighted average price anchored to that 11 a.m. high. And then as it gets back above there, it tells me now from the highest point paid this morning, the buyers are back in control. I want to be a buyer here if I have a low risk place for my stop. That's on a daily chart. Same principles apply on a 1 day chart. That is. Same principles apply whether you're looking at a 15-minute chart of the last 20 days, a 30-minute chart of the last 40 days, or a daily chart, or whatever the time frame is. All of those same principles apply because of the fractal nature of technical analysis.
And I just think VWAP work in like a bunch of different instruments, or is it mostly working for stocks, or is it like different across different instruments, the reliability of VWAP?
So I look at it for individual stocks. I look at it for ETFs, futures as well. I'm not a Forex trader, but everyone has told me who uses Forex that they find value in it. It works great in some of the cryptos. I've traded Bitcoin successfully and Ethereum with it, Solana, some of the other ones. But, as long as you have price, volume, and time, then you can access this tool. And again, it's just 100% objective. It's not like, well, it's oversold or it's overbought. That doesn't really mean anything, right? That's subjective. What it's telling us is here we are at that average price. This is a level that's been important to the market. If it's important again, the buyers will show up here, and then the sellers will start to realize, hey, there's buyers here, so I'm going to stop selling. And the buyers get a little bit more aggressive and start buying the offers, and then momentum begins from there. So it's just a fascinating tool to really look at. And first, you have to understand that market structure and how money flows in a cyclical way, through the market on all time frames.
And one thing I wanted to get your thoughts on is you've been coaching traders from SMB Capital, which I believe are not really new traders, or probably more experienced than like the newbies in the market.
Right.
What are some things these traders struggle with at SMB? What are some things that they have to work on?
I think the same things that everyone does. So, there's all kinds of traders at SMB. SMB has guys that have been there, 10, 15, 20 years who are extremely successful, but they're always bringing in new guys who are, trying to learn right from the start. And the great news for them is they're learning from a structured environment. So, someone at home might just say, hey, I'm going to start trading. I'm going to read a couple books, watch a few videos, and just kind of do what I want to do. Instead, they've got, teamwork, and they work on those together. They break into little pods, and they say, here's your group. Let's work together. Let's analyze these stocks. So it's more that you've got, extra sets of eyes. They struggle with the same things, though, buying when the stock's up too much, thinking the stock is down too much, trying to catch a bounce, and that sort of thing. It's all the same things for everyone. I mean, you go look at the biggest hedge funds on the planet. They're not immune to the same mistakes you and I make.
Are they more using a discretionary kind of approach, or is it more systematic, or is it kind of depending on each person?
But each person, I mean, some of them are super, into their, their playbook, as Bella's book, you make your play, your one good trade, make your playbook and know what your plays are. But I think that, similar to mine, I consider myself a discretionary tool, but I have a lot of guidelines. I don't necessarily have rules that I have to do this every single time something does that, but it's more, okay, now we're in this area. Now I'm going to use my mind to think about what's the overall picture in the market? Does that support this? How's this sector acting? And just the little nuances that you get from, having a lot of experience in the market. So there's, rules based, but not always 100% adhered to. More guidelines is what I like to call it.
What do you think makes a good trading coach? Because it's one thing to be a good trader, but then it would be a different thing to be able to coach someone well. What do you think makes a good trading coach overall?
I teach people every single day. And in that teaching, I think that the teacher has to, what I struggle with is putting myself back in the position of that newer trader. I sometimes, forget that, what's intuitive to me is the result of decades of experience. But what I find most effective is, just kind of tough love. Don't be a prick, but let people realize, wait a minute, why would you want to buy that stock? It's up 20% in the last 3 days. Where does your stop go? What do you think can actually happen here? Just to hold them accountable and to recognize potential mistakes, let them make those mistakes themselves, but tell them in advance, here's why I think it might be a little bit riskier or I might trade less share size. But these are lessons you have to make the mistakes yourself. Otherwise, if you don't make the mistakes yourself, you're never going to really learn anything. So someone who is, positive, encouraging, but is willing to say, wait a minute, slow down there, take a second look at that, and to give them the seeds to figure it out rather than just telling them what to do.
That's a good point. I think a lot of traders are looking for answers from a coach or a mentor, like someone to give them exactly what to do. While that could be good sometimes, but other times it's not the way you really learn and become better. So you make a good point here.
Yeah, I always encourage people, I'll share an idea and I'll say, I like this stock if it gets above here, and I would probably put a stop here to start out. And if people follow that directly, I kind of look at them and say, think for yourself a little bit here as well. Improve that. Make it your own. That's what I always like to say is make the trade your own. I might talk about 5 different stocks. One's $380, one's $4. And some people might not like $4 stocks. Well, then don't trade it just because I spoke about it. Find the ones that are suitable to you. If you don't like to trade airline stocks because they're commodity related or you're afraid of a terrorist event, then don't trade them. Don't feel left out if you miss an opportunity. Missed opportunity is better than lost money when it comes in, into these trades. That no one's going to catch all the winning trades. You've got to be willing to let some of them go without you, and don't beat yourself up for missing them. It's make it your trade on your time frame, and recognize just that you're not going to catch them all.
I think one of the other next kind of mistake here is trying to overcomplicate things a little bit too much. Some people might read a book or they might watch videos from you, and then they want to use your VWAP, they want to use something with like combined with other stuff from other people. How do you avoid to make this too complicated with trading?
Yeah, that's a great point. For me, it comes down to, when people look at my charts, they say, well, what do you look at? And I said, price, volume, and time. Those are the three most important. So only price pays. Volume tells us the emotional intensity.
Hey, everybody, it's Brian Shannon from alphatrends.net, and that is just, that powerful of a tool. That and the anchored volume weighted average price. And make some sense of it. Here's the daily chart of the S&P 500 on the left. On the right, we have the 30-minute time frame. Let's focus on that 30-minute time frame for now. And what we see here, of course, is that orange line is the 5-day moving average. As I pointed out at length on Wednesday, and I've been saying for decades now, if the 5-day moving average is declining, I have no interest in buying the S&P 500, the NASDAQ, or whatever it is that's below the declining 5-day moving average. Shares of Apple, I'm not interested in buying below a declining 5-day moving average. So that simple rule has saved me more money than anything in my career. And that is just, that powerful of a tool. That and the anchored volume weighted average price. If you read my book, you know that I said on page 91, I always keep a week to date anchored volume weighted average price on my chart. And for the SPY, that's exactly where today's high was before we continued lower. And again, when we see a declining 5-day moving average, you can't trust rallies. It seemed like a good rally this morning, but it just all evaporated right there. So the S&P on the daily time frame, we're closing the week out below the 20-day moving average. We haven't done that in a while. The 50-day moving average is still rising, and we're at the anchor from this low. I still I would like actually for this market to maybe do something like this and come down towards the 50-day moving average in the coming weeks. I'm not bearish the longer term time frame, but I do look at the longer term time frame and say, on that weekly time frame we're still bullish, but on the daily time frame we're in pullback mode. So I don't want to buy this while it's in pullback mode. I'm going to wait to see if that bullishness is confirmed. Don't buy the dip, buy strength after the dip. Once we're back above a flat to rising 5-day moving average is how I look at it for the safety of a swing trade entry. And then the NASDAQ, we also came perfectly to that anchored volume weighted average price for the week to date and below the declining 5-day moving average. These rallies shouldn't surprise you when they fail. The 20-day moving average is just above still, and again, we haven't closed below that since back here in May. I'd really like to see a test of the 50-day moving average. That would also bring us down to the anchor from this gap right here next week. That would be nice to see. So, as long as we continue to see all these earnings reports, you can point at Amazon and say Amazon was a great response, but that's the exception to this earnings season. We've seen, even Apple, the golden child, got hit on earnings. Generac seemed like it wasn't an uptrend, but it still had a declining 200-day moving average over here. If you look at that, got hit hard. Qualcomm, the list goes on and on. Expedia, the number of stocks that have been hit. And this is why I don't buy stocks in front of earnings. PayPal, it doesn't matter whether it's considered a good company or a bad company. Rambus has been in a giant uptrend. That got hit hard on earnings this week. SDGR is another one. LYV, Live Nation. On and on. You can point to the list, the numbers of stocks that have been getting hit on earnings. The Russell 2000 is still kind of stalling out in the area where it's supposed to. We've been mentioning that this is the high end of the recent range where we've been hit a couple times. So what I'd still like to see, I think I mentioned last Friday, is something like this. Build a higher low and then some energy for a break that could be sustained. Right now, we got extended into this area, and we always ask ourselves the two questions of where has it come from? It just rallied from 170 to 200. Let's just call it 200. And where did it have the potential to go before it's likely to encounter a source of supply which might be strong enough to become resistance? Well, support broken tends to act as resistance, and we rallied up there quickly. It wasn't sustainable. Maybe it will be, but right now, I think this is the more likely scenario on the weekly chart for the Russell 2000, and that will give us an the more wasn't 10 of 100. It comes higher. I'd still like to see, I think I mentioned last Friday, is something like this. Build a higher low and then some energy for a break that could be sustained. Right now, we got extended into this area, and we always ask ourselves the two questions of where has it come from? It just rallied from 170 to 200. Let's just call it 200. And where did it have the potential to go before it's likely to encounter a source of supply which might be strong enough to become resistance? Well, support broken tends to act as resistance, and we rallied up there quickly. It wasn't sustainable. Maybe it will be, but right now, I think this is the more likely scenario on the weekly chart for the Russell 2000, and that will give us an opportunity perhaps in a couple weeks to get long the Russell 2000 in a low-risk way. If, however, we get back above, let's just call it 196.5, and we stay above 196 next week, well then I'm flexible. That's the beauty of being a swing trader. It seems as though the larger picture would support a pullback to create a higher low, but if it continues higher, well, I'm going to listen to the message of the market. I'm not stuck on some analysis, and that's what I do every single day for subscribers to Alpha Trends. And I wanted to point out this is the last weekend that you can save on the Alpha Trend subscription. It's really a good deal. Usually it's $999 a year for the subscription, which includes the end of day video update like this one 5 days a week, and then a second video. It's generally about 10 minutes long, with stock trade ideas lined up for you on multiple time frames, with the reasons for potential entries, the risk management, and that sort of thing. Each midday, I do another video update of those ideas, that we had mentioned the previous night, adjusting the stops, all that. 2 courses. One's a 9-hour course, a 30-minute one-on-one with me. We'll do a one-on-one live webinar, you and me, and all of that for $7.99. So look at the link in YouTube below or on the website if you're looking there. Let's get back to the analysis. The semiconductors are, we spoke about, the potential of the 50-day moving average in this anchored VWAP being tested, and we've come very close to that. I don't view it as a magic support level that has to hold. I think that if it does this, gets trapped below a 20-day moving average, and then in about a week and a half, actually next week, right here, we're going to be getting rid of that data. This was 50 days ago, so we'll be getting rid of that data. That means the 50-day moving average will start to flatten out, and if we see it trapped below the 20, well then maybe that could pave the way for a deeper pullback in the semiconductors. They've been a huge winner this year, so why not, expect a little bit deeper pullback? It's possible. Just be careful if you have large accumulated gains in there. Don't be complacent. Complacency is how you lose your gains. XBI, the biotechs, I'll continue to say it, they just look awful to me. They're below the anchored VWAP from the low that it made this year. That means the average participant from that low is losing money. The average participant from everywhere this year is losing money because the anchored VWAP for the year is right here, that thick blue line. So this is just a losing index. In terms of where people are positioned rather, and it begs to think that maybe we could go down, as I mentioned, to the 61.8% retracement, which would bring it down to that 80-ish level. So I would not be buying in here, not with a declining 20 and a declining 50-day moving average. It's just a recipe for losing your money. Once in a while it works and you get lucky, and then someone comes and points their finger and says, see, I bought there and you're so dumb. But the point is, I want a process that I can repeat. And truly, risk management is my focus day in and day out for everything I do, which is what keeps me out of financials when they still have a declining 5-day moving average. And you could say, well, the 5-day moving average turned flat in there. It did, but look at how far it had come. It was extended. If I was looking to get long the financials, I would want to see it hold that 5-day moving average and then do this. That's the bullish scenario. But obviously, that bullish scenario didn't pan out, so it's continued lower, and maybe next week it can right itself. I honestly don't care because I don't trade the financial stocks, and I also don't trade energy names, but they're still battling with this little battle of zone of prior resistance. If you're watching this on YouTube, I appreciate it if you give me a like and a subscribe. Other than that,
I think
Today I want to show you how to avoid
commitment. Time is subjective, but it comes down to those three things. So, the only thing on my charts is those plus some simple moving averages and anchored VWAPs. I've looked at all the other pieces, the stochastics, RSI, Adams Pitchfork, sunspots, you name it. And I, always be curious and willing to learn, but keep it simple. There's a phrase, I forget forgot who said it, but simplicity is the market's greatest disguise. That, it's just like losing weight. How do you do it? Well, you're more active and you eat less. But, people can still, sell billions of dollars worth of this new program to help you with it. Each year, there's a new fad diet that is willing to be sold because people want shortcuts. And the shortcuts aren't, how you do it. You do it by keeping things simple and focusing on what matters. The thing that matters most is price. That's why I always say only price pays. Because at the end of the day, you can come up with 100 reasons why you thought the stock was a good buy. If the market doesn't agree, then your opinion just does not matter.
Yeah, good point. Same thing goes with trading. So there's always going to be a new method people want to talk about and prefer, and people might be tempted to go from the old method to the new method just because it's apparently better. But being able to stick to what you already know and are good at it, definitely a big key there.
Yeah, it's difficult because there's so much information available, and there's so many people passing themselves off as experts. And there's some great young people out there who've done a lot of good learning about the market, and they have 2 to 3 years of experience. And I see them getting, hundreds of thousands of people following them on Twitter. And I look at it and say, these people are book smart about this, and that's a great start. But you need some trading experience and to really get in there and understand the nuances of what's going on in the market. So to me, it's, it takes time. It's about finding your personality again in the market, your time frame. I'm most comfortable with the shorter term time frame. I call my shorter term time frame, anywhere from a couple days to a couple weeks, ideally. That's where I am at my stage in life. My real active day trading days are behind me. It doesn't mean I don't do some once in a while, because I still have that skill set, but it's just not in my personality anymore to really be interested in sitting down and battling it out every day for 20 cents here, 30 cents there.
How do you keep improving or developing as a trader? Because there's always that balance of like doing what works and trying to also learn and develop and kind of apply new things. How do you kind of keep that balance?
Yeah, that's a difficult one because, especially if you're trading, on your own, that, you don't have someone there pushing you. So you sounds like you speak highly of SMB, and I think very highly of them as well. They, help recognize a talent, and they'll push you, buy more, get involved, go heavier. You're there, have confidence in your trade and that sort of thing. It's easy to become complacent in where you are, just doing it by yourself. So I think everyone should, could benefit from a performance coach or someone outside of yourself to say, to look objectively at some of the blind spots that you might see to yourself and say, hey, well, why did you get involved in that trade? And it doesn't even have to be someone who has a lot of trading experience, just someone who's a good performance coach. It could be, someone who's, been trading athletes and that sort of thing, but has a good mind for performance and breaking through to new levels.
In this video, you'll learn how to use 2 effective trading indicators.
Yeah, and also just connecting with other traders sometimes help, like having a group of buddies or traders you can talk to just to kind of see what they're doing differently. Also a good key there to help.
Absolutely, 100%.
What would be your advice for people who are new to trading? They're trying to kind of find out what they want to trade or what they want to use. Should they kind of learn a strategy and just stick to it, or should they kind of try to make something of their own first?
I think they need to, find a strategy that makes sense to them. And if it helps them make money, refine it to their personality and their time frame, and have 1 or 2 bread and butter type of, strategies that that you perform well at and can kind of consistently go back to, but always be trying to, try new things. But when you try new things, look at them with, much smaller share size and recognize you're outside of your normal, you're outside your wheelhouse, as they say, and that, it's time to go slower here and recognize there's greater risk because you're in uncharted territory. This is new to you. So go slow. Don't be in a hurry.
What would be the process for trying something new? Would it be to kind of test it first and make sure you have some past data to look at it? Or would you just sort of go live and just trade on a small size to look at how it perform live?
I think you have to go with with live, small share size. You've got to feel the emotion in there. And if you're not feeling the emotion, then it just isn't real. The losses, you can justify all you want. You can, ignore them and just focus on your winners. You have to have some money, some skin in the game.
Anything we didn't kind of touch on or talk about you want to mention or you want to focus on? Any advice you think traders should kind of have before they leave this interview?
Well, I think that we've, kind of covered a lot of that. It's about finding your way in the market, going slow, getting the education that makes sense. Consider the source of where you're getting your information from. Is it somebody who's just read a lot of books and is basically writing a book report? Or are they people who've, been involved in the market and coming up with new things and learning with their own money? That to me is what separates, what the good advice is and what the bad advice might be.
Something else you gotta tell me about is expectations. A lot of people are probably coming to you with big expectations, some may be more realistic. How do you kind of help to readjust these expectations of people when they come in the market?
Well, you have to remind them that, listen, this is a tough game that, 80+% of money managers fail to beat the S&P 500 each year. And people are saying, hey, I've got a $10,000 account. I want to make $100,000 this year. Okay, so you're going to make a 900% return when, the majority of professionals that you're competing against aren't able to beat, 15, 18% a year. How realistic do you think that really is? Now, you're a brand new trader and love your enthusiasm, but yeah, you've got to be realistic. There's just, people want to quit their job and they've got a $30,000 account. Well, if you do 20% a year, that's a pretty good number. If you do that consistently, that means your $30,000 account, you're going to make $6,000 this year. And, you've still got a $30,000 account because you took that $6,000 out to pay for your little 1-bedroom, 200 square foot place that you're barely surviving and eating mac and cheese on $6,000 a year. Keep it, you need people. A lot of people come in underfunded and thinking that, they're going to be the next great trader and they might have one or two big trades that they get involved in where they maybe get lucky or maybe they were good and, they leverage up and buy a bunch of options. They turn that $30,000 account into $100,000. They think they're on top of the world. And then what happens? Well, over the next 6 months, they take a $3,000 loss, an $8,000 loss, $2,000 gain, but slow trickle down to, back to that $30,000 level. And then they start gambling real hard and then they end up losing the money. It's, these are things that other people have gone through and have experienced, and there's nothing new about it. You're not going to be the best trader there was. That's just the way it goes. There's, it's the same thing as everywhere. I wouldn't discourage people from trying. I'm not trying to be a downer about it, but, again, you asked me what makes a good coach is keeping things realistic. Saying, listen, I would love for you to be the guy who can turn $30,000 into $100,000 and next year 100 into 500 and then $1 million and 5 million. But the odds are simply against you. It's just not realistic. You might think you have it, but keep it realistic. That's all.
I think people to check out your books. I think you've got 2 really good books out there. So Maximum Trading Gains with Encore VWAP, the most recent one. And you mentioned Technoanalysis using multiple time frame, also the previous book you wrote, which are really good books for sure. Where else can people connect with you or find out more about what you do after this interview?
Yeah, I mean, the best place is Twitter. I'm, at Alpha Trends. I've got a large following there. Any free information I put out, I always put it on Twitter. But I do have a weekly YouTube video. So you can subscribe to, Alpha Trends on YouTube if you don't want to do Twitter. And then alphatrends.net, I've got a subscription product and that sort of thing. So it's heavily education focused. And, those are the 3 places.
Any advice you have for traders before we leave this interview or we finish off? Anything you want to let them kind of think about or let them go with?
Well, yeah, I mean, just, again, be realistic, keep your ego out of it and, find your process, find your personality and what makes sense to you in your time frame. Those are the most important things. And then try to be able to tune out the noise. Just because Warren Buffett is buying Occidental Petroleum and you're a swing trader, you don't have to care. You really don't have to care about what most of the news tells you you're supposed to be interested in.
Good point. I appreciate it. Thank you, Brian, for your time and for the advice you gave to my listeners here. I think this has been of great value. I hope they connect with you and see what you're doing out there. You do some good stuff. So I really appreciate the time you spent with the interview here.
Great. Well, thanks for having me on, and good luck to everyone out there.